What's up, guys? Welcome back to Roensch Capital Charts. Today we're taking a look at Palantir Technologies, ticker symbol PLTR, on a variety of time frames in anticipation of tomorrow's trading day, Wednesday, February 7th. Well, Palantir stock here today, finishing the day up 30.8%, up over 5 points a share on a stock that just about 24 hours ago was less than $17 a share. A little over 24 hours ago here. Popping from 1672 approximately, testing $22 a share today. Of course, we went over the earnings results last night, holding that move today and more, breaking above around that 2130 level that we were talking so much about yesterday, and holding that, consolidating into the close through the after hours. Let's take a little bit of a look here. I want to start here by taking a look just at the opening drive here. You can see that we had some rejecting off of that 2 standard deviation volume weighted average price band. That's going to be that red line there on my screen. Nothing nearly clean enough for me to take any intraday scalps on Palantir here today. Also, with the news catalyst, I think it kind of throws a wrench in the mix as far as predictable statistical edge is concerned. I mean, unless you just had a perfect setup, which, you know, nothing here for me intraday on Palantir. If you guys would like to get my personal scalp setup alerts, take a look at that link in the pinned comment to join the Roensch Capital Gold server. Let's move on now and take a look at the 5-minute chart though, because this one's going to be very crucial, I think, in taking a look at volume. So let's zoom in now on today, because what I'm most interested in is how we accelerated the move, not just held the move, but we accelerated and moved the move forward rather than giving a little bit back, which is all too common on big earning moves like we saw yesterday on Palantir. We got this opening drive volume. That first candle, of course, is always going to be a big one. But here on this pump, right, that's what we were looking at. That move there is what we were just looking at on the 1-minute chart. And do you see how we held rather substantial volume through 25 to 30 minutes worth of trading as the stock moved higher, testing 2130? We then, of course, faded back below the level on lower volume than we claimed it on. Okay, we saw low volume, sideways, essentially just slow, grindy up movement throughout the rest of the day. And then what's interesting is we broke back above 2130, which we saw here was actually being semi-respected as an intraday level. We break back above, grind higher, we see some lower volatility movement into the close, but volume actually increasing a little bit. Not quite that U that we're used to seeing, but as far as volume is concerned here today, if you ask me, we were seeing some bumps in volume on grindy upside moves and a little bit of fades in volume as the stock pulled back, at least for a lot of the day here. Which, I mean, listen, if you're bullish, that is what you would want to see. If you're bearish, you would rather see very low volume on upside moves and then big volume on dump-offs. And you'd like to see that repeating. Okay, let's move on now to the 30-minute and get some context as far as the self-fulfilling prophecies are concerned. Take a look at the 50 period, that white line, and then the 200 period, that gray line. Listen, again, this is one of those negatives with big moves like we've seen on Palantir. These tend to lag, okay? And you're kind of left floating in thin air, at least from a psychological self-fulfilling prophecy indicator perspective, for a little while. Now, between the 30-minute, 4-hour, and daily charts, this 50 period on the 30-minute here is going to be the quickest to react, and it's actually getting yanked upside very quickly, going from 17 to nearly 20 in a day. It's not all that common. We've covered more than half of the ground of the move in one day. I mean, that's a beautiful thing to see. It's hard to deny that. Name of the game here for bulls, just get as many psychological potential safety nets up underneath the stock as quickly as we possibly can. Zoom out, take a look at the 4-hour. You can see here, these are even worse. The daily's gonna be even worse. The longer time frame you zoom out, right, the more that these levels take their time, or these indicators more so, to catch up to big massive moves. And you can see this move here, that's going to take its time. I mean, that's not a 1 or 2 day kind of thing. This is likely to take weeks to catch up to the stock price. So you know what, I'm keeping an eye on it, but right now I think the 30-minute and the daily are going to be far more relevant than the 4-hour, but you know, I'm always watching it. But let's zoom out now here to the daily. Okay, you can see here that we're now above that 2130 region, and we were up here. Actually, we broke above where we were just back in November 2023. But we were up here just that recently. We had that big fade down to about 16 bucks a share, and we've reclaimed essentially all that ground and more here in one day. Okay. Now listen here, since we just had such a tremendous move on this stock, we can't go getting greedy, right, from a bullish perspective. If the stock continued to move higher, would that be great? Yeah, fine. That would be great for the short term. But you know what would be equally as great in my opinion? Is for those of you with a more mid to longer term view of this stock, if the thing moved sideways for a number of days, listen, if not weeks, and allowed these self-fulfilling prophecy indicators to catch up, get some feet underneath this stock, right? Get up much closer to the stock price, close the gap that the bears are undoubtedly salivating over, this gap here and this gap here down to the 200-day, right? That consolidation would be more than welcome, in my opinion. You know what else that would do? That would make sure to claim 2130, because listen, it's only been one day, right? I'm a 3 to 5 trading day kind of guy. If we can claim 2130 over the course of the next week of trading, that's a different ball game, in my opinion, compared to just claiming it for one day, where on a lot of stocks you tend to see fades. Okay, so if you're a bull in the next, really, I mean, looking ahead to tomorrow, but inevitably the next 3 or more trading days, one thing's on your mind: just hold 2130 as a support level. If we make our way up toward 23, great, but just hold 2130. And by the way, if you're a bear, it's very similar. Just fade back beneath that 2130 region. You know, ideally, if you're a bear, you'd love to give up 20. But just understand that as of right now, approximately, we're looking at nearly a 10% downside move to do that, 8.5%. Right? Now, implied volatility, it's not uncommon. We discussed this and we saw it, right? A big tank off in IV falling from about 82% down to about 59% today. Incredibly common occurrence after earnings. A couple of things. If you saw a little bit of IV crush in your contracts today, that is the culprit, or over the last couple of days, right? Really today more so. That would be the culprit right there. All right, big tank off, not uncommon. We discussed it here on the channel. All right. Also understand though, the lower this goes, quite literally, the more comfortable the options traders are seeing the stock in the current range that it's trading in, the current price range. Because again, in a very literal manner, the lower implied volatility goes, the less volatility the traders are pricing into the options chain. And the lower that goes, the more potential opportunity new options buyers could have for potential IV pump if we see that return back toward equilibrium. All right, speaking of options, let's take a look at the chain, which is heavily weighted today. Nearly 2.5 million total contracts traded, 1.81, really 1.82 million calls, 682,000 puts, nearly rounded up. That is nearly 3 times the amount of calls traded today compared to puts. That is absurd. But you look down here at the short-term speculators at 0 to 20 delta. We're seeing about 380,000 calls, about 347,000 puts, not quite as overwhelmingly leaning to the bullish side. We're seeing, it's still slightly leaning bullish in that short-term speculation delta range. But we're seeing a little bit more indecisiveness with the traders in the very short term. But if you go out to the mid and especially long term, like that 41 to 60 delta range, that's 61 to 80, 81 to 100, again, those are going to be those at the money and in the money contracts, typically representative of higher quality contracts, more expensive, usually a bit longer dated. All right, some of those are going to be leaps as well. Massively leaning to the bullish side. I mean, look at the numbers. That is absurd. That's where you're getting the overwhelmingly bullish overall call put ratio. It's in that mid to longer term outlook. Whereas the shorter term, again, that the short term speculators still leaning slightly bullish. Don't get me wrong, but it's much more indecisive. Hey, listen, let me know in the comment section today what you thought about Palantir today, and also what other stocks you'd like to see me cover here on the Roensch Capital Charts channel in the future. Listen, even if it is just Palantir, let me know. That feedback helps out tremendously, and I'll see you in the next one.